today's session is a bit less practical, more conversational, and the whole concept is around a common problem I've seen people have. Actually, I also had the problem, and I know many people who also are very knowledgeable in this financial analysis and modeling space. It's a problem that they have encountered with many people too. So that's why I decided today's topic, we are going to touch on that problem and have a conversation. In fact, we want it to be contributory. You can always chip in your own opinions, and whatever questions you have, you can ask immediately. There's no, as usual, it's going to be very, what's the word to use now? Not rigid. Whatever you want to say, you can always pop in, unmute your mic, say them. I'm monitoring the chat box, so I have 3 screens, so that way I won't miss out of anything you say. So what's the truth about financial models? Are they always useful outside of those very rigid 3 use case scenarios that are very common? Oh, you want to raise money, and then that's part of what you've been asked is your financial model. At that stage, then definitely it's a must have, a must do, and that's when most people come to people like me and say, oh, you know what, help me with my financial models. An investor is asking for it. Then another case I've seen is established companies where it's part of someone's job role, but then somehow the person has been not doing it very well and has been getting away with it. Then suddenly the company is trying to do some creative expansion. They want to expand, or they want to, maybe acquire another company, or they're looking to get investment from a third party, right? And so it has become really, really important that they even do a financial model to see how this is going to play out. And then you find out that, it looks like the guy we have in-house, our head of financial analysis, or someone whose job role involved that, can't do it, or they are not confident about what the person is doing. And then they reach out to someone like me or someone outside and say, you know what, I want you to do this for us as a one-time. So I've mentioned 2 cases. One, when people are raising money and the investor says part of their due diligence involves them getting the company's financial statements, and in fact, they're asking for a financial model, something that ties into the forecast for the company. So that's one. Everybody knows when it gets to that stage, you need to do a financial model. The second case I've seen of where people do not argue it and they just think, well, I need to do a financial model, is the second I've mentioned is a company that is expanding or trying to get some funding from a third party, and they just found out that their in-house finance person is not doing a proper one, or they are not confident in what the person is doing, and they decide to get an outside consultant to help them with a financial model. So that's the second. Then the third is when companies that are really big, really large, they just do it as part of, like I said, someone's role involves doing budgeting, and maybe the person is really knowledgeable about financial models, and so he decides to not just stop at budgeting at cost center level. He does a proper, financial statement, multi-year forecast that is dynamic because he has the skill. So outside of these 3 areas, are financial models useful? Are they useful especially to small companies? Are they useful if you are not the financially inclined? So I have it here already. If you are not raising money, are financial models useful? And you are not a large company. Maybe if you're a large company, you already have staff. You can say, okay, you know what, you are so person and in the finance role, we expect you to have this skill. In fact, from today onward, we are making it as part of your job delivery, to do these models for us, updated quarterly or updated by twice a year. So when you are not a large company and you are not raising money, are they useful? We'll talk about that. Number 2, if you're a small business, are financial models useful in your day-to-day work? Are they useful in actually modeling, actually helping you to get on with your achieving your goals in your business? Number 3, you are cash flow positive, you are profitable, right? A lot of these questions apply to small companies, but then in case, as you know, in Nigeria, there are some big companies that operate like small companies. When I say operate, management-wise, it's still almost like it's one person or 3 persons deciding all that happens. They do not probably have that strong financial management and people who will own something like this and make it part of their own work within the company. So that's why I'm careful not to just say small companies, but very, very large companies will already have someone that they put this as part of the person's work deliverable. And I don't want to mention a specific role it to be tied to, but let's just go ahead. So if you're that is cash flow positive and profitable, why would you use the financial model? You're doing well, especially if you're a small company, that you understand your business dynamics very well. Imagine in my own consulting business, I have in my head all the things that needs to work right. I don't need especially when you're not a finance person and you probably will be paying somebody else. I don't need somebody else to tell me what to do to hit my numbers. I might need to meet some people to hit my numbers or where opportunities line. I have an idea or a very close to reality idea of how much I'm spending per month, what I need to earn to be able to, get what I need to put in as income for me to be able to expand in terms of staff strength and maybe location wise. So every business owner, especially if you are profitable, that pressure is not there for you to try and do something to say, okay, we want to expand on paper, we want to look for money, and we might need to show people some financial projections. So imagine your business is a small business, it's doing really profitably well. Will you need a financial model? Is this something that becomes something you want to urgently and deliberately put in place, and always you are trying to keep it updated? So we'll talk about that. Number 4, if you're not an accountant, and when I say you're not an accountant, you own your business, you're not an accountant, or maybe you are the MD, you're a manager for a business, again in quote, maybe a small business, and you're not an accountant, but you know all about your business, you know where the gaps are, what needs to be done. Does the financial model really help you? You're hands-on. It's not like you are someone in the UK and then you have a business here in Nigeria, and then that's why you are trying to do a model so that the person in Nigeria, the business in Nigeria, they are forced to give you a report. They are forced to always outline their plans. That's not the case. Here you are hands-on managing your business. You are not an accountant, so that's not really something that you enjoy doing. So will a financial model be of use to you? What's the essence? I already know what is happening in my business. We're going to deal with that. Number 5, many people, especially those of us in Nigeria, we know that all these 5-year plan, in fact 2 years plans, they don't happen. So most times we don't even care what's 5 years. Even Nigeria say, do we even know what Nigeria will be like in 5 years? So, but then again, is that something credible enough? Let's evaluate it. Will you say, I don't need that projection into the future? Things are so dynamic that every month, every week, we're having to update our plans and all. So, why do I need a financial model? So, number 6. Anybody has anything that I've not captured in these questions that you feel are the reasons why people think financial models can be restricted in use, or personally for you, you've always had a concern that you felt financial model is just that something that maybe finance guys or people who just want to collect your money, they keep making it look like a big deal. After all, there are guys doing a lot better without a financial model. Their business is going really smart. I know guys in this area, in that field. So any question from anybody or any additional thing I should add here?
Yes, good afternoon, sir. Good afternoon,
Yes.
everyone. My name
Good
is
afternoon,
Yomi.
sir. Oh, good
Yeah,
afternoon, sir.
I think additional point to this is that, I mean,
Yes.
like you mentioned, our environment is very dynamic. Things change every day. The micros are not stable.
Yes.
So as you are delivering the financial model, you realize that most of the assumptions have already changed. So because of that, some people don't care. Thank you.
Great. Great. Okay, I hope I will be able to talk on that. And like I said, this is going to be a very much more I don't even have any hands-on file to share. So it's more of PowerPoint and we going through all of this. So any point I'm talking about, so when we get to the discussion part, I would like other people to share their own ideas. So thank you, sir. And what you said, I think I was planning to talk about it in that would be the number 5. So if there's any point that I'm raising as an explanation and you think there's more to it, I'll be glad when you share during that section too. So looking through the attendant list, if there's anybody I can call out that I know. Okay, so anybody wants to say anything about this part before I start picking the different concerns one after the other? More importantly, do you think there's a concern I should add that is not yet here? Okay, maybe as we go on, if you remember anyone, you can always chip them in. So number 1, let's talk about you are not raising money. Like I said, that's the biggest, for me as a consultant, that's where is there any job I've had to do that was financial model and it was not that they were trying to raise money? I think maybe just 2. One was for a telecoms company that the MD was trying to expand their business. So they are in 5 countries and they were trying to, he was doing some restructuring. I think the CFO had left, he was getting a new CFO, but he wanted to set a much more obvious direction. And so he wanted to do this while they were transitioning in the new CFO. That one, so I could say he wasn't doing it because he was trying to raise money. Then another one was for a UK company that they have, they're into private capital. Like they are not private equity. They call themselves a private capital firm, and they have like a conglomerate, but they have subsidiaries in 5 countries in Africa. So the MD was wanting to just tie his ideas to, like, he has his plan. He wants to do some expansion then into real estate, then into school, then into, I think, 2 other businesses. So he wanted to have something that is going to be flexible for him to be able to, and especially at that moment, he had some ideas, expansion on real estate, how will it play out versus expansion on the education sector. So for him, he wasn't raising money, but he had ideas he wanted to flesh out and tie into a forecast. So he needed a financial model to properly do that. Out of the dozens of financial models I've done for clients, those are the only 2 I know that didn't involve raising money. So I understand that most people think of financial models when they are trying to raise money, especially startups, especially companies who are trying to get loans too. I've done for clients that it was because they were trying to raise loan from some financing bank. It could be like a bank of industry, an infrastructure bank, or it could be the typical normal bank, the retail banks, the banks we normally bank with. Let me use that word. So outside of raising money, what do I think? Do I think it makes sense to do a financial model? I'm going to use myself as an example. The business that I own I started it in 2014. I had 2 ideas. So originally, my interest is an amalgamation of the data analysis I was doing. I was doing data analysis part-time. I had been working in telecoms industry, but I worked in 3 different companies and slightly different areas too. Technical area as a telecoms engineer, then data analysis area, purely data analysis. Then the 3rd role was a mixture of the 2. And so I knew what power existed in data analysis. I knew that there's that gap and there's opportunities, and that I can always do something on my own in that space. But also, I'm a software, because of my technical background, I always want to create something that is like a product, like a software-based product or something, even if it was hardware. But since I moved away from hardware, and hardware is really difficult in Nigeria, so I tried it, I kept doing it for some time, but I knew it was going to be difficult to pull off. So I said, okay, software. So data analysis and software. But then software would take a lot of time. So I decided I was going to start my company as a data analysis consulting and training company while I am building the software on the side, which is still what we are following. But it's when you are doing something for 6 years or 7 years now and you're not making progress, you know something is wrong. So we are taking a completely different approach right now. There's a whole lot of, we're trying to get some people to even help us do a proper, otherwise it will be 20 years time and it will still be what it is right now. But why am I saying this? I never tried to raise money. That was why I started with the consulting and the training space, because that one is a very low cost kind of a business. In the beginning, I didn't even have an office. I didn't have to incur any cost. So whatever profit can be piled into the other one, that will be like a software as a service. Okay, so I'm trying to explain that I am the perfect example of a company that was not trying to raise money. And in fact, mine is even in a field where all that I need to do, I could think it in my head. I wasn't setting up a factory, so I didn't have all the typical types of capital expenditure that some businesses will incur. And so it's the same too for many startups. You know, they think about themselves and they see that we're not setting up a factory, we're not buying tractors, we are not. Why will I need a financial model? Why will I need something that very, in fact, if for some startups, when people want to invest in, they don't even ask for all of that. They just ask you for what's your current figures, you know, customer acquisition, and then your burn rate. So you find out that you probably even have a lot more reasons for not wanting to do a financial model. Why then, for me, does a financial model make sense, or why are we doing it? And so why should a company, you know, that's not raising money, that probably is in a field where you don't have to incur capital expenditure, or probably even have to hire a finance team? Like for us, for the first couple of years, we didn't have anybody doing our financials, but then we had to start engage for the financial reporting side, the auditing and tax. We had to get, then gradually we started putting in place a structure and having, but still the person works for us, you know, as a consulting person, right? So again, just to buttress the point that we are a very good example of a company that is not raising money and has every reasons to not have a financial model. So why should we have? Why does it make sense to have? Number one, you know, when you do a financial model, it forces you to think about your expenses, to start doing the proper bookkeeping. And I tell you, bookkeeping is not a trivial task. That's why companies sometimes will even have different teams. So you will have a team for payables, a team for receivables, a team for different aspects of keeping track of the companies and transactions, financial transactions. It's not if it was trivial, they would not have different people, you know, doing those roles. You won't have companies with so large financial finance team. If those things were easy, you know, they will pay a lot for software and still they will hire many people. It's because when you start doing it, you will know it's not trivial at all. And so when you start doing a financial model, by the way, what's even a financial model? It's your financial statements with projections that are dynamic. That's just the pure truth. You know, your financial statements can be easily done, and it's the bulk of the work, right? It's more of someone who is knowledgeable in financial models. We now do the projection. That's where it's either you know it or you don't know it. It's not a matter of you can work your way through or you can spend hours and maybe eventually get it right. No, it's either you know it or you don't know it. So after the financial statements, it's either you know how to dynamically project forward or not. So financial model is the one where it's a dynamic forecast, not the one where something changes, you have to redo the entire thing. You can't just change the input and output, we adjust accordingly. So a financial model, in this, my explanation, just take it as financial statement with a dynamic forecast. Okay, so by the time you want to do that, you will first of all need to do your financial statements. As a company like ours, we will now have to start doing a proper bookkeeping. So internally we use QuickBooks, but you can get away without using QuickBooks. I know companies use Excel, but using Excel will not reduce your stress. In fact, you might find out that it's cheaper to use QuickBooks. Why? Because you can have one of your team members. So you can say your admin staff or your secretary can be keying in some of the expenses, without you having to give him or her the entire Excel, or be afraid that if the person deletes the Excel, or so the QuickBooks actually, and it can generate invoice, can do a lot more than just keeping records. So I usually tell people it's sometimes cheaper to use those. If you think QuickBooks is expensive, you can use FreshBooks. You can use some other ones. There's one that is free, just that I don't know if it does the bookkeeping properly, or it just does only invoicing. That's WaveApps. So, but then continuing, number one, when I say number one, doing your books is no trivial task and must be done. No matter the kind of your company, no matter the size, small, big, one-man business, one-man army, you need to do your books, your records of expenses and income. And when you start doing a financial model, it's just natural that you will have to do that. Okay. Then number two is, by the time you do your financial model, especially the financial statement side, it gives a right framework for tracking all that is happening in your business. Especially if you are not a finance inclined person, you're not an accountant, you start understanding what payables are, what receivables are. Many people who do not have accounting background struggle with it, and it's one of the things that can kill your business. When you don't understand that sale is not income, is not equal to cash, that you have made sales does not actually mean that the money has come in, and then there is a proper way of keeping track to ensure that the money that is coming in is not too much lagging the sales and your expense timing and all of that. So the summary of this is, number one, every company needs to have a bookkeeping. They need to keep records of their expenses, of all their financial transactions. And by the time you have done that, you've done the bulk of the work in a financial model, right? It's just the arrangement in the form of a financial statement that now that is just all that is left, and then the forecast. So you find out that doing a financial model is something that is not so difficult the moment you have your financial statement. And your financial statement is something you must do as a company, right? So a personal truth is, I say that it's not that it's something you must do. I gave an example of us, and I told you the personal truth is we struggle also with it. That at a point now we are thinking of maybe hiring someone purely just for our financial records, so that we don't have so much trouble reconciling our figures, and it just becomes easier, even though we're a very small company. Okay, so I'm just trying to reinforce the fact that it is something you must do, keeping track of your records, and then the financial model is just used now doing forecast. We'll talk about, does the forecast really play in line with reality? But the truth is, the moment you have done all of your record keeping, you are almost done. So that forecast is a very trivial aspect of it once you have a financial model. Remember, I said not everybody can do a financial model. Once the person has done it in a dynamic way, you can always carry on with it. So the number two, you're a small business. There is an advantage to that. It means you can always start easily. You don't, like for us, that's the advantage you are getting. We don't have to hire 5 people or 10 people internally. In fact, right now we have someone who does our financial bookkeeping and audit on a consulting basis, right? So that's how easy it is, right? So it's very easy for you. It's just a matter of you deciding, understanding that it's important to do. Then number two is that you can always use, there are a lot of accounting tools that are meant for small businesses, that you don't even need to have to understand all of the logic. You just need to understand some basic accounting and then set it up, and then they are able to generate your financial statement. That's the cool thing. I have people who generate their financial statement out of, I keep mentioning QuickBooks, because when I do consulting for clients outside the country, I find out that a lot of them use QuickBooks. The small businesses, they use QuickBooks. So, and it's cheap. So I feel, if it's that cheap, why not just use what's best in the industry and not just try and save some $3 a month? They make it very competitive. They even have special pricing for Africa. So not to market them, but I'm just trying to say that why it's that common, even for clients, my clients that are not based in Nigeria who have money. It's not that the money is trivial, to them, and it's because you're able to pull out your financial statement. The real work is in somebody filling it in. The real work is in the initial setup, which is not difficult because they know that most small business owners are not accountants. So they guide you through the setup. The real work is more in somebody dedicatedly filling in, maybe preferably daily, or at least weekly, so that things don't pile up that are not being tracked by it. Then number 3 is, at that stage, your financial model is just you adding a forecast to your financial statements. You pull out your financial statements from QuickBooks and you just add a financial forecast to it. That's all. Again, it might not sound as trivial, it might not be as trivial as I've said it, but that with someone for the right skill, it's like half a day's work or sometimes 3 hours work once he knows all that he needs to be aware of as for your plans. So number 4, it shows you what is financially peculiar to your business. That's where we get it wrong. There's a lot we know in our head that do not actually play along with what is happening on the ground. So just because you are getting a bank alert every moment there is a payment into your bank, it does not mean that you understand that your money is not, your sales is being tied down for too long by some classes of customer. Does not really mean that you understand that there are some peculiarities to your business that is until you look at the figures. I'll give you an example, a personal example. So this is number 5 already. For us, our rent goes into, so we use a serviced office, so serviced in terms of that we are paying separately for the office space and separately for the training space where we use for our training, the training rooms. Okay, so now at a point when we started with that model about 3 or 4 years ago, it made a lot of sense because we could start with a very small office space and then pay only for the training rooms when we use them. So it was not a problem. Then gradually into the 3rd year, when we looked at our financial reports, we found out that what we were paying for both the office space and the training room, right? They were so much that we could have rented an entire office space, own our own facility and have all of that, without even having to share with somebody else and not have to fill in a calendar of when we use the training spaces. And we're like, maybe at this point, we really need to go and rent our own entire building. That was never going to occur to me if we were not keeping record of how much we are spending. Then at the point 2, we found out that I was traveling to Abuja and Port Harcourt just to go and do trainings was so much that it might be cheaper and much more like an expansion if we hire people in Abuja and Port Harcourt, and then get them an office space and use the same, and we might even get more businesses. We won't have to be telling people that we can only come on our scheduled period. They can always go to the office and there will be someone they will meet, and we can do maybe those fewer number trainings, not the ones where we will have to calculate that it must cover our cost of traveling to Abuja. So I'm just trying to explain that there are some things that even you as the owner of the business, that your business is not so complex that you can understand what that is happening. You will not know some of the things that you need to be aware of that needs to be adjusted if you are not keeping financial records, if there is no financial model, financial statement that is updated preferably monthly and the minimum, but weekly is best. So, but if you say you're updating it monthly, at the end of the month, you're able to see all of your financial positions and expenses and how they've gone out, the pattern of the expenses, what they've gone to, and you're able to see, are there things you can cut down on? Are there things you can substitute? Okay, so number 3, you are cash flow positive and profitable. So this is where, some people say, those guys in Ladipo, they pull in a lot more money than some of us with all this book knowledge and all. Maybe our own 1 year revenue is their own 2 weeks revenue. I do not contest that truth. But you know what? A company that is doing very well without doing proper financial management, without proper financial documentation, they will do a lot better with it. So it's not a case of comparing yourself with somebody else. It's a case of comparing the 2 versions of you. It's a case of comparing your business with proper financial documentation and financial planning versus your business without it. That's where you will know whether you really need it or not. Not that you just take your company and you compare with another person's company and you say, this person is doing all what we are saying you should do, but you are bigger in both revenue and profit. That's a wrong comparison. Compare yourself with the version of you who is doing all of that, doing all of this proper financial documentation. So again, just to buttress the point, without proper financial documentation, you will never really know where you are underachieving. You will not know which of your customers. I'll give you an example. We have some clients, right, that they always seem to be very price sensitive. This is what I mean. When they are negotiating with you, they always want a discount. No matter what price you give them, they must ask for a discount, right? And then you know what? Maybe when we do Excel training for them, they did it as a very, very low discounted amount. Then one time they asked for a special kind of training. So maybe they asked for Power BI. But then when they were asking for it, the person discussing with us, because it was a very niche area, it wasn't probably the HR. So it was the particular department that needed it, that pulled in the request, and they were the one doing the conversation around the structure and all. And HR was just to be in copy and to approve and to do their own hand. And in the end, they paid a lot more. They paid our normal amount without any discount. Immediately when we look at that, we look at your business from that client, you see the pattern, you will know that actually they can do a lot better for even the Excel that they've been doing at less than half the price when they squeeze us for discount. So what do? Next time that they ask us for a quotation, for the HR contacts us and say there's a training they want to send in people and they ask for a quote, we are not so eager to give that discount anymore. We give our normal price. And then as usual, they will come back and say, you know what, this, that. So let me give you, there's a real life one like that. So what we did is we changed the curriculum. So we updated the outline, and so we changed it, made it look that for an HR person, he's going to see that it's really different from the ones we've been doing before. But for the persons we are going to train, we are still going to train them pretty much the same thing. It's just more of we expanding how we're going to impact it to them. So content-wise, not so much different as the outline-wise. So the HR is going to have a feel that is different in terms of outline. So when they come back to us and say, but you did, I will say, okay, can't you look at the outline? Can you say that this is really different and this is much more relevant to your team, right? So they can't come at that angle. So it's no longer the same product at that really crazy low price. And then because we know their capability, we're able to be very resistant to their crazy discount they are requesting for. Again, this would not have been possible if we had not been keeping record. And so if you are not keeping records, there will be some things, there will be the ones you will know, because especially if you are a very hands-on manager, it's not like this is a side hustle for you. It's not like you are running 4 businesses at once. And some people, that's what they do. In fact, if you are running 3 businesses at once, this becomes super important. But if you're like me, that this is your life, this is all you do almost every day, you understand every aspect of your business, you might be thinking there's no need. But the truth is, I just give you an example. For us, that we are even a data kind of company, there are some things that we don't know until we start digging into the figures. So with proper financial documentation, you're able to see those places you are underachieving, and you can see those places you need to, that you can easily improve at. So it's very useful. Remember all what I'm saying. We're not raising money. We're not looking to rent, to take a loan from a bank. We're not looking to give it to somebody outside, because that's where most people restrict financial modeling. Until you need to give it to somebody outside of your organizations, they think, I don't need a financial model. Okay, so then number two is, if you're lucky that your business is this profitable and cash flow positive, you need to have a plan to how you're going to reinvest the cash. It's not until when the money comes in that you're going to now start thinking, oh, where do I put this money? Because I bet you're not going to think straight. The thinking that is happening at that moment that the money has come in is not going to be as very well thought out and as impactful as the one that you have thought of ahead, because that's what financial modeling enforces, for you. You are forced to think ahead. You're able to think, this is how we did last year, looking at the pattern of our expenses, looking at the pattern of our cash flow. This is how we are likely going to do this year. We're likely going to have this much excess cash flow. With this kind of a cash flow, maybe it's better we start, doing something in this area, doing something in that area, or trying to open a proper investment account. So like for us personally, what we did is, last year, so I decided to go and incorporate the company in US, sorry, not US, in Europe, in Estonia. So I had to travel to even achieve some of it. I had to go to UK for an aspect of it. But the key thing is, because I know we are cash flow positive, and I knew that we being in Nigeria and just incorporated as a Nigerian entity excludes us from a lot of things. It's unfortunate. The moment you take Nigeria in so many, when you're trying to do, there have been many partnerships we wanted to do with people in Australia, in US, that just because we're in Nigeria, not that the people denied us, but the platforms that we need to integrate with for that partnership does not allow Nigerians. It might be that we're going to share revenue and it's supposed to be done automatically, but then all of the ways of sharing the revenue does not allow Nigeria. Maybe it's by PayPal. You can't use PayPal if you are the one to collect the money. Maybe it's by one other payment gateway. Maybe it's by one platform that does all of the automatic management and all of that. And you find out that Nigeria is just not the options, right? And another thing, the more I started working on the app side of our business, the product side of our business, the truth is most of our clients are outside of the country. Nigerians don't like buying products for now. So all the products I have, the little I have done, 90% of the sales are coming from outside guys. They feel more comfortable paying for them than Nigerians. The few Nigerians that have paid, they will make you work for it. You will have to remarket it to them. They will call you on phone. You will have to explain what it will do. You will have to physically. So it's like hard work. It's as if you are doing consulting. So any product that you want to sell, you want it to sell by itself, not that you have to be actively, be involved in the sales conversion and cost and all of that. We found out that, well, Nigeria is going to stress us. So all the platforms that allow us to create those products and the places where we try to sell them and the ones where we got people to developers to work for us, we found out that it was better to just build it as if it's a global, as if it's not a Nigerian product. It's something that is meant for the global marketplace, right? And so for most of all those marketplaces, being in Nigeria was a disadvantage, not disadvantage in terms of they listen to us and they shut us up. No, it's just a disadvantage in terms of that by the time you want to onboard and register, you find out that they will say Nigeria is not supported, or they ask for some documents that you will never have as a Nigerian, or they say the options that are available for companies outside of EU and US are very limited. So again, what am I trying to explain? Because we are cash flow positive, and I knew that we're going to make some excess cash flow the coming year, I started thinking of where to put those excess cash flow into, in terms of product, in terms of even investing. So for some of the accounts we have to open, it's because there will be an investment account, an account that will allow us that the sales we make that are from the global marketplace, from US clients, from Europeans, they don't come to Nigeria and come in as Naira and come in with whatever problem we'll face again in Nigeria. In fact, coming to Nigeria is very expensive because it will have to come as a wire transfer. So we had to even have in place accounts that are EU accounts that, once that sales come in, they just stay there. So the same way companies, that's what even large companies do. Microsoft, for their international business, is the company they incorporated in Ireland. Same with Apple. Same with most of all these companies that are not even Nigerian companies. So it's a normal standard that they try and incorporate in a place that gives them tax advantage, ease of reconciling their sales, their global sales, the least documentation problem, the greatest access to gateway, to payment gateways and all. So back to here, right? If I wasn't keeping proper financial documentation and I didn't know ahead that we're going to have some excess cash, and I'm just like, when the excess cash comes, I start thinking, oh, maybe we should buy an additional car, or we should buy an additional printer. That's how all those monies are going to go. But because I knew they were going to happen ahead, I started planning ahead and putting structure in place so that when that money comes in, there's already something that we know we'll put it into, right? So it helps you to do a proper structured planning, even for that your excess cash. And the third one is this: every company that is cash flow positive, I bet you there's one of your products that is the main cash cow. And the truth is that product is a matured product, is a product that will not keep being your cash cow. For us, Excel training used to be our cash cow. In fact, we used to have very large classes. There were times that we would tell people, which I'm almost crying when I'm remembering this now. We'll tell people that the class is filled. We'll get like 20 people want to register. We'll say, no, 20 people, you will not properly understand. It will be too large a crowd. We wish to turn down people, and say the class is filled. We have to move to next month or 2 months time. And that was how the money from Excel was pouring in. Now, if we even get half that number, we are lucky. So now, and it's not that people are not doing Excel, but then they see cheaper ways. Now there's so many people doing the same training that whatever you see us, even when we try to adjust our outline, we try to add more value, some people will still go on our website, copy whatever we added, put it in their own, and you will not know because everybody is promising you now. Everybody will promise you heaven and earth. It's until you finish before you will know whether you go what you promised for. But then somebody is promising you, two people are promising you two things. One is at half the price, the other, you will most likely go for the one that is half the price. If you are really worried, you will call that one that is half the price and say, you know what, I saw this thing somewhere else. Are you guys going to do exactly what? And what will you do? You say yes, or maybe you just add in something extra and say, you know what, we'll do something extra for you. But then the truth that happened to us was the cash cow 3 years ago, 4 years ago, is now the what are we going to call it now? It's not like a goat. It's no longer a cow. It's now very small in size and all. So,
it's even like a fowl now.
Yes, exactly. So you want to? Why are we still alive? It's more of Power BI and financial modeling. So almost as when Excel went down, people started doing Power BI and financial modeling, and it's also beginning to happen now that at one point, first of all, it was Power BI. We were like getting Power BI projects and all steady and training, and now I'm already seeing it that the market too. A lot of people now train Power BI. A lot of so it's looking saturated too, and it's financial modeling that it's now the. So anyway, I'm just trying to explain that a cash cow is never a cash cow forever. You have to. When Excel was cash cow, it was looking stupid for us to do financial modeling and Power BI. I was working on building the materials and all. Sometimes we get only one person. We do adverts. The same advert that will get you 10 people Excel, we get you only 2 people. And the same amount you spend in money and all, we get you 2 people for Power BI. Sometimes we get only one person. Sometimes we make losses. We'll say no, we understand. I understand that that's the pattern, because even when we started Excel training too, it was like that, we'll get only one person, we're making losses, but we said that's the thing in the business anyway. So back to why I'm saying this. If you don't have plan, you will not be able to say how you're going to allocate maybe 10% or 20% of whatever is coming from that cash cow, put it into a greenfield project, something that is just sucking money now, but it's going to be the cash cow in the future. So if you don't have a proper financial documentation, financial planning, how will you know? You will just be eating the money that is coming now. You will just be like Nigeria. When the oil money comes, you will eat it. Then when it goes, everybody is now, you start looking for who to blame, and that's what actually frustrates some staff. Staff will be like, when the money was really there and coming, these companies never really valued us. Now the money has gone down. They are laying off. They are complaining that everybody is not working hard. Sometimes it's not that, just the nature of the thing. You're supposed to plan for when it won't happen. And just to wrap up this part, last year we didn't lay off anybody, though we're a small thing. But the truth is, even as a small thing, we had the biggest reason. We're into training, and training was badly hit when the whole this thing happened last year, right? But we were able to keep paying all of our staff. We were able to keep making payroll for like about 8 months, April to December, or should I say April to November, when everybody was in quote working from home. Which, how can you work from home in a training space? Are you training yourself at home? So for us, work from home was not really possible. It was just like, well, just keep doing something. So being visible, let me use that word. But we were able to cover people. We were able to understand, and I wasn't putting the pressure on them as much as saying we have your salary or all, though we forsook some of benefits, but it was something that we all agreed to, so that we don't have to eat into the real salary. Why that was possible was because we had been saving. Unfortunately, what we were saving the money for was for our startup, was for a SaaS, software as a service product. So yes, you could say the money was supposed to be for something else, but if we had not been deliberate about having that money, probably we would not have survived, in full. The whole team survived last year. So I'm just trying to explain that even for small companies, these are very, very practical and applicable. So let's go to number 4. You are not an accountant and you know what you want. So that's the vibes I get a lot from small business owners who have no accounting background. They will tell you that they can tell you they don't even need an accountant. They don't need all this fancy software for them to understand what's happening in their business. They can tell you right on the spot all that is happening, as regards their financial records and all. Yes, I understand that it is impressive what they know without documentation, but the truth is, it does not undermine the need for a proper financial statement. It does not undermine for the need for a proper financial planning, right? So number 2 is, especially when you know where you want to go, when you know what kind of goals you want to hit, right? Then financial model is what will help you to connect the dots. At a point, we were trying to expand to Francophone West African countries. So I was going to Benin, I was going to Togo, because it's funny. It can be easier to do trainings for banks and for especially those companies that are both in Nigeria and Benin and Togo. If you go to Togo, if you go to Benin, take EcoBank for instance. EcoBank HQ is in Lomé, right? The amount of pressure and competition you are going to face trying to get your proposal through in Nigeria, you will not face 1/5 of it if you go to Lomé, right? So, and there are so many other things too, because I went there. I even did a kind of I was like, for 3 months I was doing a kind of immersion where I was working part-time for an ICT company in Benin, in Porto Novo, so that I could understand the environment properly and the opportunities. And I saw there is a lot of opportunities, little competition. The only problem I faced was French. So for me to do it on the level that I needed to do it, I need to be able to also train in French. I haven't got opportunities, but I couldn't solidify them because of the French. But that aside, the other part of it was that because I was keeping my financial records, I also knew what had to be in place. You know, I knew the kind of financial expenses that will need to also come in place, the way we will need to structure the arrangement. So a financial model helps you to connect also the dots of where you want to be to where you are right now. So you can be able to properly, instead of you saying you're going to grow and never in your own mind did you consider the amount of money you might need to spend on hiring more people, on the kind of, if you're in a manufacturing business, the capital expenditure that will need to come in. So if you don't have a proper documentation, then it becomes a lot more difficult, especially when you can't be in all those multiple locations at once, right? So how then do you even know how things are happening there, or when things are happening how fast? If you have never been keeping record because you have the figures in your head, and the person in the other branch is just registering all kinds of expenses, you cannot be able to compare and say, these expenses don't make sense. After all, in Lagos, we spend this amount. You in Abuja, you say you are spending this amount. This is times 4 the amount you are spending in Lagos. In the same country, how will you know if you are not been keeping record? And more importantly, if you have not been keeping record and you think you will know, how will the other guys in your business know? The people you have hired, you know, the admin person that is probably even keen, as me, you have one admin staff that is doing your bookkeeping for you. How will the person be able to even know something is looking fishy and be able to draw your attention to it? You know, so the last aspect of it is again, if your business is doing really, really well by your own judgment, without any proper financial record keeping and management, it's going to do a lot better. So that should be the comparison you should be making. And finally, which ties into what Mr. Yomi has also mentioned, you know, Nigeria can be very, very, things here is really crazy, where you're even struggling to keep up with monthly plans, let alone trying to live up to some 5-year plans. And most of the times we do financial models, we are always doing those multi-year plans. So how do I liken it? I say it's as if you're trying to do a PhD program. We all understand that PhD programs are always multi-year, 4-5 years programs. Are you going to say you won't have a plan because nothing ever works to plan? No, you have a plan, and more importantly, you will understand. That's the kind of approach I want us to take. You understand that your plan is not a make it and leave it kind of plan. It's a plan that you are iterating on, you know, as frequently as you need to. And that's the same thing too with a financial model. That's why I say when you are having somebody do a financial model for you, they should do it dynamic. They should do a dynamic one. And that's what, like that UK company, that was what he wanted. I think he has an in-house finance person, but because he wanted a dynamic financial model, he looked for an external person, because for him it was worth it. You know, I don't know, maybe he doubted his in-house person. I don't know. I have no background information about that, but I know he has an in-house finance person. But he wanted an external person because when he was even giving me the brief, he wanted it to be dynamic such that they can be adjusting things and the plans change. And more importantly, he wanted me to create an expansion scenario where you can say this is real estate in Liberia. They have like a student hostel. And it's okay, so what if we replicate it in another location? You know, similar cost scenario. What will be the effect? So those kind of really unique expansion plans, he wanted me to put in a way to capture them. So for him, he understood the fact that I'm going to build it for him, and I'm going to say bye-bye, and he's going to say bye-bye to me, and he paid in dollars, and he had paid, and we say bye-bye to ourselves, and he keeps using it. He keeps dying. So he told me he gave me the export of his QuickBooks, the way it comes. And so I used my own, I created my financial statements to directly feed off from that export. So they have five subsidiaries and one group, you know. So I did for all the subsidiaries and I did for the group. So for each of the subsidiary, I took the template of how it comes from QuickBooks, put it on a sheet, And then we started extracting the income statement, the balance sheet, the cash flow from those ones, from that export from QuickBooks, right? Automatically. Then I started doing the forecast. So the forecast was now month on month that collapses to year. And so that one, dynamically comes out of it. Then there is a scenario and input sheet, I think, in between, where you can put in how the forecast should happen. And that's what did I call it? That expansion scenario too. So that one is in between the two anyway. And so in summary, for him, he was going to start using it anytime he wakes up tomorrow and he has an idea about, okay, maybe instead of me expanding this our business here in Sierra Leone, let us leave that one the way it is. Let us just say it's growing 10% year on year. Let us go to, I think they have another business in one of these highlands, Mauritius. Let us go to Mauritius and say, this is our subsidiary in Mauritius. We're going to do go this they have like a service apartment, all these high expense luxury apartments, So what if we do ×2 what we have there, and it's going to cost us X amount of dollars, it's going to take 2 years to construct and blah blah, and he plugs all those things there without him reaching to me. He sees the outcome. So that was what he wanted, and the way why he wanted it is because he knows that he's going to be changing things. He knows that next year he's going to export out his QuickBooks, plug it, put it into that sheet app already customized for him for it. And as soon as he plugs it in there, flows into his forecast, he can go to the scenarios and adjust things. And so that's the way it's meant to be used. But when you are thinking about it just to raise money, that's why people always have all these wrong ideas about it. Because when if it's just to raise money, the moment you raise the money, you dump it. It is no longer useful. Sometimes we even create that version that is just to raise money that we know cannot work for real life, right? But now we're talking about real life. You're not raising money. You're not trying to use it to get a loan approval. In real life, it's a living document. It's a living plan. It's something that you keep updating, as realities adjust. So what other thing am I supposed to say here? So I don't think you should see it as a useless 5-year plan. Yes, it's an inaccurate 5-year plan, but it is one that you're meant to keep updating. Whatever you think is the new reality in your business, you should try and capture it in it. And more importantly, the reason is it will force you to be much more structured and look at all the nooks and crannies in your business and be able to put things. The more you think about your business, the better it will always be, because you will always see something to improve. You always see what is, especially when you're looking at the figures in your business. That's what we talk about in data analysis, that figures give you the insight. So when you're now looking at the figures that is even relating to the blood of your business, the money in your business, I bet you will always see insights that will help you to be better, right? So that's my planned presentation. Any questions? Let me try and give you the link, the resource link. So this is the slide in case you didn't get it before now. Any questions, any contribution to, is there anything I've said anybody wants to expand on, or something I've said that is a different angle to it, or something I even didn't say that I should have said, so that all of us can benefit? Any contribution? So I'm trying to paste the, maybe I'll just use this other window. Any contribution? Okay, great, that's come up. Okay, so in the absence of any contribution, then I'm going to paste this around. Yes, sir. Please go on.
Okay, in my experience, I think that financial modeling also helps you to reduce surprises in your business. If for instance, you're going through it with an expert, in future projection, for instance, when you are projecting and say, okay, I want to expand, and you go very granular with whether it's your client or even in your business, so that you're not surprised in futures, or even if you're a startup, right? And I was not aware I had to pay these fees, or I have to get this done.
Yes.
When people do financial model, regardless of whether it's for funding or whatever, I think it helps you to reduce surprises. in the future.
Yeah.
In terms
Yeah.
of planning expenses, I mean.
Great. I completely agree. I've had cases where the person I was doing a financial model for, okay, I can even, let me just think it so that I will not mention the ones that are confidential. Okay, so I know I will say. So it's a company in Zambia. They're into fintech, and they were going to expand their operations in Zambia, expand to 3 other African countries. And so for that expansion, they were seeking money. So there was like a Dubai entity that they were going to raise money from. So now that's all I would say. But then when I started doing the financial model, remember, this is someone, the owner is really knowledgeable. He knows, he gave me all what he thought were the parameters in his business, the inputs and all. But by the time I did the first version of his financial model, there were a whole lot of things he didn't consider before that, I had to put in. And at first, there were some that it was obvious to him that yes, he was like, oh, thank you. I didn't even that this is necessary. There were some he debated that he wasn't sure I was going to need. And then when we had a short meeting on it, he found out that they were useful, maybe if not all. Yes, most of them exactly the way I've put them, some of them not the way I've put it, in a different way. But the first thing to even understand better, the things he had overlooked. And in the end, it now looked like the money he was trying to raise was not even going to be enough. So he now had to be like, maybe he's going to need to raise a lot more than what he was planning for. So I completely agree. Thanks a lot for that addition. Any more contributions?
I have a
before
question.
Okay,
One
yes.
question. One question.
Okay.
Would you advise, whether as a business owner or you're working in finance or wherever you find yourself, would you advise that it's always, I see or I observe that it's better to have some level of accounting knowledge because you've related bookkeeping and financial modeling and how it helps. So would you advise one to first go for such courses before you start financial modeling?
For the company now, or
Basic accounting.
But
if you're a small business owner, for instance.
Okay, the owner of the business, right? The entrepreneur.
Yes.
That is a very tough one to have. I don't think there's ever been any entrepreneur I've been able to convince to go and do accounting. Because most times the entrepreneur, someone who has started his business already, is already on a very, there's that drive that is already coming with. There's already that, I don't want to call it like ego, but there's already, has a deep motivation already. He's not looking for an extra motivation or whatever. Like, he's already going to do what he wants to do. And then most of the time, I find out that there are always one of two categories. Is that someone who already has a finance knowledge or accounting knowledge before the whole entrepreneurship stuff, or someone who does not. So the people in the first category already have finance and accounting knowledge and exposure. Usually they are the ones who even reach out to a consultant to say, help me do a financial model, or help me, they are, because they know they need it. The ones who think they don't need it don't usually, or who don't have the accounting and finance background, don't even think they need it, except if maybe an investor is asking for it, or a bank, or someone they want to raise money from is asking for it. That's when they only think of doing it, and they think of doing it only for that purpose, like they use just to be used for that purpose. After that purpose, they don't see themselves using it afterwards. So, but to directly answer your question, it's going to be very tough to tell. Even the first category, even if he thinks he wants to be better at financial money, I always find out that it's a tough call for them. There's so much on their hands. There's a lot they are trying to do. They don't even want to do it most times. They say they would rather have somebody else do it and maybe just explain how it's been done so they can be updating it, they can be using it and adapting it afterwards. That's the scenario I see play out a lot more for those who really are very open to it and understand the usefulness. But generally for all owners, what I will say is they need to have their bookkeeping. That's the number one thing. Because the truth is, once you have your proper bookkeeping in terms of your expenses, your income, you have it as a process that is ongoing, that is not an haphazard one. It's not until when you want to do tax filing that's happening, because that's what happens in most companies. Until when it's to do annual returns and tax filing, that's the only time that they do their financial records. You want to have it that on a monthly basis is being done, and preferably if you can get it to be done by somebody else, because me, that I even think my business is a very easy business to do, and I have the motivation and I have the knowledge to even do my own bookkeeping. I struggle with it. I struggle in a way that I don't understand how I'm struggling so much in keeping my own records, that I'm beginning to think of having to maybe get somebody in-house that will just be doing only that, So it's not a trivial task that, even if you have the knowledge, you want to be doing as a part of your operational work as your normal job role. So most of the time, it's good to set a structure around it. Is it that you get a consultant to set up the templates, to set up everything, and maybe help you understand how it works, and then you have one of your team members, part of the job role, to be filling it in, or if you think you can be filling it in, which I don't think is sustainable, because the time is going to come, you will struggle, you will not be able to fill it in for 2 months straight. So, or even the person that I said already used a QuickBooks and he exported it, he still has someone that was putting in data in the QuickBooks. So I would say the knowledge is good to have, or the awareness, but ultimately you don't want to be the one doing it. You want to just set up the structure, make it part of your business processes, that somebody is doing it or it's been done. So that's my own answer. Let me see.
Thank you very much.
Yes, sir. Okay. I'm trying to look at questions. Thank you so much for the present. Okay, so just I think no more questions then. So thank you very much for joining. And my digital marketing guys say maybe if they can fire me, they will fire me. That every session I must always let us be aware of our sponsors. So this session has been brought to you by your BSS Limited, and we are into training. Well, that's our cash cow for now. Maybe when the products we are trying to do is fully developed, we'll start marketing those ones. But right now, the one that we need you to be aware of is that we run trainings that are into Microsoft Excel, financial modeling, and Power BI training. And we try to do it in a very different way. We do a full package where, as you do the training, we give you support services. So this is part of the support service where every week we try to keep in touch with you. We give you weekly tasks. Because trainings can just be one-off sometimes, that it does not let you know if you don't keep practicing. So we don't try to stop at just training you and leaving you on your own. We like to let you practice by giving you ways to practice data, adding you to the community, making sure that you don't just lose what you have learned and you master it ultimately after some period of you using all the resources we share with you and the community we make you part of. So thank you very much, and see you next week. So the next session at 4 p.m. will be for the Excel one. The Excel one is going to, let me just drop the link. And just remember that this can be very slow. Let me grab the link from my other browser. Okay, so for the Excel one, I'm putting the link in the chat box. So if you just go there, you can be part of the Excel one that is going to happen very soon, in some 50 minutes time. Thank you, and see you next week. Have a nice Sunday. Bye.